Of course, Kiwi dollar, there's not a lot of major news this week. The only one to look out for is the GDT, Global Dairy Trading Price, Global Dairy Trading Index. Excuse me. That would be the index to measure the dairy product prices. So the prices has been rising for the last two release. I think it is, if I recall correctly, it was in the region of about 11%, and the last one was about 4.5%. So of course, if the dairy products continue to increase, it is a good news for the Kiwi. But unless there's a big increase or a big drop in price, I personally don't expect much impact on the Kiwi. So if price continue to rise for 2%, 3%, the impact on the Kiwi dollar is marginal. So this Kiwi dollar H4 chart, if you see the chart now, the request is for me to look at H1, H4, so I'll just toggle between the two and take a look. So this is a H1 chart. The trend is not that clear, so it is more in so-called sideways manner. So with no key data out from New Zealand plus US dollar, I think the market will be waiting for next week FOMC instead. So I expect the Kiwi dollar to continue in a sideways manner. So that's my comment. I'll just put it over here. Of course, this is what I expect the Kiwi dollar to move. But as a trader, we always trade based on reaction. So we react to the market. So let the market tell us where it is heading, and then we shall make our trading decisions accordingly. So the comment over there, if you ask me, is just for show. It is a form of prediction. So again, for traders, we don't predict, we react. So this is the sort of conversion region as well that I have marked over here. Quite a nice round number, 0.7080. Of course, nothing is perfect in the market. So some of you may ask me, why is there a false breakout over here? It's supposed to be a support. There's definitely a reason for false breakout. So anyway, so you as a trader, there's never a scenario whereby you find a market that's so perfect. But why do I see, some of you may ask, why do I see this as a conversion region? There are enough areas where price rejects. That means price failed to go beyond it for me to identify as possible area of conversion. Okay, as you can see the areas that I've marked. Let me zoom in so that it's clearer. As you can see, all these shadows, about like 5 to 10 candles with the shadows failing to cross this price level around 0.7080. And then over here there's easily another 10 candles that failed to go above it. Over here you can see a few candles that got rejected before breaking to go higher. And over here also another 4 candles that failed to go lower, but eventually it closed lower, but it was a forced breakout. And then after that come back another 2 candles that sort of face a support over here. So that's why there are enough candlesticks in this region, just by looking at it, for me to identify this as a possible conversion region. And when it is a conversion region, to me it is also a region of decision making. So meaning to say, if since this is a decision making region, if there's any candle that close below it, somewhere here, maybe it is a clue to tell us that market has made a decision to go downwards. If candle closes above the region, then possibly it is a clue that market may have made the decision to go higher. So this is my so-called view on Kiwi dollar. So for this week, I do expect Kiwi dollar to continue in a sideways motion. And as I mentioned earlier, market has already priced in 100% rate hike next week. So having said that, it means that at this moment I don't see any reason for dollar to strengthen unless there is a further speculation that after December rate hike, the next rate hike will be maybe in the first quarter of 2017. At this moment, that would be the one of the reason that could possibly push dollar stronger. And then for Kiwi dollar to go lower, the other possibility is weak Kiwi. And based on the current situation, one of the possibility would be the GDT having very bad figures. So that means the global dairy products prices has dropped drastically. That will be an impact on New Zealand and eventually the Kiwi dollar. So one of the possibility is a bad GDT number, causing it for the Kiwi dollar to drop below. So of course, on the other hand, a good GDT number possibly would see the Kiwi dollar finding support over here at 0.7080 to head upwards. So over here are suggested entries. Okay, these are the suggested entries. Oops, wait. Okay. The potential so-called target over here. I like to put the immediate target with reference to potential support. So you notice for the short suggestion, the target is slightly lower, all the way to the whole number of 0.70. Okay, 0.70 is here for your reference. That is the first target, but of course, if at the point of price hitting first target and you have reasons to suspect that Kiwi dollar may fall further, then you can always make the choice to do a trailing stop or to take partial profit only. Then of course, for long, the first target is slightly nearer because referencing the last high, that will be around the 7140, 7140 thereabout. That will be the first target. So if price reach that target, at that point in time, if you assess there are reasons to believe you can go higher, then possibly you could take partial profit and apply trailing stop to it. But if at the point you have reasons to believe that there is the limit to how far Kiwi dollar may go, then you can make the choice of closing out your positions or position totally. So your next question could be, how do I know what are the reasons that could possibly move the Kiwi dollar higher or lower? So of course, that one will rely on news, central bank policies at that point in time. So of course, if you have no inclination of whatsoever, then you can always choose to close out all your positions and then you look forward to the next trade. So this Kiwi dollar on H4 chart. Okay, just in case there may be a minor so-called support over here, which is a bit tricky. If you short, it is a short distance away only, which is at 7040 thereabout. So you notice from your potential entry to that possible conversion region, again there is about 25 pips. Considered near because we are trading the H4 chart. For if you are trading the 1 minute and 5 minute chart, of course 25 pips is a lot. So it's a different perspective. So on a H4 chart, 25 pips is considered near. So what you can do is another suggestion, since if you agree with me that 0.7040 is the area of conversion also, what you can do after you enter, if the market gives you a signal to enter for short, and as the price move and towards the 0.7040, even if it moves only 26 pips or 25 pips or so, what you can do is to protect your position first. Since it's only 25 pips for your position on a H4, closing out your position may not make much profit anyway. So suggestion would be you just protect your position. shift your stop loss to entry price. So in worst case scenario, if this 0.7040 region really turns out to become a support and the price reverse to go up, you don't lose a single cent. But of course, if it doesn't go up and price really moved lower, then you did not miss out the profit. So the 0.7040 could be the first milestone for any short trade to consider, for you to consider protecting your position first.